So did I outperform the market in 2024? The short answer is yes, but let me explain. The Dow Jones index went up 12.80%. Now, if I couldn't beat this index, I probably shouldn't be investing individually at all. And if you didn't manage to beat it, you probably should reconsider as well. The Nasdaq went up 30.78% this year. This is a huge overall increase and well above the average. The S&P 500 index was up 20.01%. Remember, the historical average increase for a given year is between 10 to 13%, depending on what time frame you're looking at. So you can take the conclusion that it has been a very much a up year overall. But when asked the question, have you outperformed the market, they're typically referring to, have you beaten the S&P 500 index? If you ask Google, the odds of beating the market in any given year is roughly 25%. The more years that you add consecutively, the odds of continuing to beat the market continues to go down and down and down. In fact, most of the sources show that 90% of money managers don't continually beat the market itself, and they get paid excellent money to do so. So why should you or I be able to beat the market? One, we are personally vested into our money and the outcomes that we receive. We can have a lot more hands-on approach than normal money managers would have on a single individual account. And there are far more resources and information available now than there's ever been. We can now buy and sell quicker. We have so many free investment platforms that we can be a part of, and the barriers to entry have never been lower. It has never been easier to start investing, and there are so many free resources out there that you can learn from. Now, my investing goal isn't solely to beat the market itself. Don't get me wrong, I would continue to love to beat the market. But it has been a very long time since we've had a good solid market correction, and I'm not letting my greed level expose me that much. When I select companies to invest in, I like to look at certain parameters and diversify my risk. My primary goal has been to find good companies for the long term that have good financial statements and that they have the resources and aptitude to thrive and weather any storm. With that said, I am pleased to say that we got a 25.62% return. Remember that the S&P 500 index return was 24.01. So we beat the market by a significant difference of 1.61%, which is relatively 6.7% higher than what the market return was. But how is this significant? On the surface, that's a small amount. Remember, compounding interest is huge. If I can average that 1.61% higher over the long term, we're potentially talking millions of dollars. To help me illustrate this, let's say we have two people. We'll have Brian and we'll have George. Both are 32 years old, and let's say they have $100,000 invested into any investment fund. Brian gets a 10% yearly return and doesn't invest another dime until he retires at the age of 65. With that 10% yearly return, he is now up to $2,554,767 in his nest egg. That would get him about $102,190 of yearly income using the 4% rule. This is awesome, right? But George, let's say George managed that 1.61% higher difference on average for the same time frame. So instead of the average yearly return of 10% for that $100,000 from age 32 to 65, he averaged 11.61%. So instead of a $2.5 million nest egg, George now finds himself having a nest egg of $4,187,026, which would safely net him roughly $167,481 using that 4% rule. This is an increase of 64% in his expected income and overall nest egg, just from that 1.61 difference in yearly returns. So even though it would be really nice to have beaten the market by even more this year, like many people have, I believe my portfolio is built in such a way that it will recover well from any crash. And we managed to actually outperform the market this year. So it is a win-win. So how did your portfolio do? What are you doing to help protect yourself from any impending crash? Please let me know in the comments below, and don't forget to subscribe.